Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust is the best way for you to sell your highly appreciated public stock, private stock, cryptocurrency, real estate, or other highly appreciated asset to defer tax and be able to create and preserve more wealth. I'm your host, Brett Swartz. In each episode, I am joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He's a veteran NLP master practitioner and certified financial planner. He founded Fearless Wealth over 22 years ago to train investors to avoid the crashes while fully participating in those long bull markets that can last for years to decades, all without trauma or drama. His specialty is training people who have tried everything to help them quickly get control back over their investing and wealth. How, do you ask? Well, by making investing powerfully simple, by learning how to read street signs while driving at 65 miles per hour. Please welcome to the show with me, RC Peck. RC, how are you, sir?
I'm pretty good. Thanks for having me. Thanks.
Absolutely excited to be here. By the way, we're also streaming on expertcresecrets.com. That's expertcresecrets.com. There are some things that the commercial real estate world can learn from individuals in the financial planning world. So RC, before we dive in to some of the specifics about being able to make great decisions when investing in the stock market, would you give our listeners a little bit more about your background and current focus?
Yeah, so my background, I'm a single dad. I have dyslexia. My parents had their life savings embezzled when I was 19, my first year in college, by their trusted financial advisor. So, when you say my background, I think kind of different parts of my life in regards to kind of what we're doing here is to really kind of crack the code on what really works, not just what sounds good or what sells good. So my background is just figuring out how to just keep trauma and drama and volatility and instability, all those things are unnecessary in your financial life, to keep them out of your portfolio. And so I spent a good deal of my late 20s really kind of figuring out what and what doesn't work. And a lot of what ended up helping me was that I had dyslexia. So reading was extremely difficult. I could read. If you asked me at the end of the page what I read, I'm like, I don't know what I read. Read it yourself. But it was undiagnosed. So it was kind of difficult growing up in a conventional education program, even in a good school. So I kind of bring some of those unconventional, you got to see it. How do you see it? You have to see it in a way that's unbiased, it being the investment. So that's a little bit of the background. And I started a company in 1998 to really pull the trauma, the drama, the fear, the anxiety out of investing, and to really just get the big picture right and just grow your money in just a powerful, simple way.
Amazing. Looking forward to diving into some of those simple ways to pick the strongest stocks with RC Peck here. By the way, you can find RC Peck at fearlesswealth.com. That's fearlesswealth.com. Before we go there, RC, I like to get to know you a little bit more and help our listeners to get to know you a little bit more by asking you to imagine yourself back in high school, perhaps even in the university days. Perhaps you're already in Seattle, Washington. But you're your younger self, right? And I want you to picture perhaps one or two gifts that you believe that you might have. Maybe some people call them strengths or superpowers that maybe you identified at a younger age. I believe we've all been given certain gifts to be a blessing and help to others. So I'm curious, what is one or two gifts or strengths that you believe you were given, and how does that help how you help and bless people today?
Gosh, thinking back to that kid, right? I'm 50 in a couple weeks, and that kid, depending on where he is in the timeline, 15 to 22 years old. So, when you ask the question, and I actually like questions that I don't know are coming because it makes my brain really think back and not prepared. And so I think that kid back then, I grew up in Illinois, I went to college in Illinois. He was actually pretty good at not having to belong to a clique or have to posture or have to behave a certain way. I was likable, right? So it wasn't that, but in you asking me that question, like, of course, all kids want to belong and all people want to belong, but I think there are parts of me that was okay with not belonging and not maybe losing myself in a group. I still wanted to be part of groups and part of organizations, but just kind of noticing that I could be autonomous but still be connected.
I think that's a great answer, and really, really a way perhaps that you can help people think. And this, I think this is probably because you've probably thought different along the way, or weren't afraid to think differently and do things a little differently. Is that a fair summary?
Yeah, I mean, I'll say this: I had to think differently.
Hmm.
I was growing up with a brain that didn't understand letters, words, sentences, paragraphs, pages, chapters, or books. And guess what? That's how you get measured on your IQ, and that's how you get into school. So I didn't know it at the time, but I figured out how to get good grades without without knowing how to read.
And sometimes our weaknesses become our strengths, right? And become our biggest superpower
Yeah.
to help other people. So I think that's wonderful. So now let's dive right into simple ways to pick the strongest stocks. So, RC, what's the number one secret to simply picking the strongest stocks?
So look, you have to see what you're buying. That means looking at a price chart. I'm going to keep a lot of the nuances out of it, but the first thing is you have to buy something that is already doing what you want it to do. We're not taught this. We're taught to buy low, sell high. If you do that, it probably means the thing is falling or buying deep value. So, and I'm not necessarily expecting, I'm not here to pitch the idea. I'm just letting you know what I've noticed in working with people over 2 decades, that if you show someone a simple price chart and you teach them that all things, being equal, the thing in motion stays in motion, meaning it is trending higher, that find that one thing. Now we actually have it. I call it the free stock market rate of return. Simply, it's just, the US stock market. That one thing is incredibly difficult to beat. Like incredibly difficult to beat, especially if you add in dividends reinvested. So the first thing is, look, you've got to be able to match this free stock market rate of return, which includes dividends. That's where you want to start, not where you want to end up, but just start with the thing that almost no advisor, no person can beat over any 5-year period. And so that's the first thing. If you want to buy a symbol, it has to be outperforming that free stock market rate of return, right? I mean, it kind of makes sense, right? If you can get something for free that's going to be quote unquote everyone over a 5-year period, you start there. But if you want to add a symbol, that's fine, add a symbol, but it has to be outperforming that free stock market rate of return. So what's going to happen is it's going to filter out, 99% of symbols, stories, narratives, hope, and it's going to leave you with really the strongest parts of the market, which is what you want, right? I mean, price direction is what's going to make your portfolio go up or down. So, answering that question, it's looking and having this true filter of saying, I only buy when it's stronger than this.
Okay, got it. So let me see, make sure I captured that. So number one, you have to see what you're buying, right? And you say a simple, I think you said price chart, right?
Yeah.
Things in motion stay in motion. So you're actually understanding you're being able to read that, I guess, is a better way to put it. Even though you're seeing it, are you actually understanding and comprehending what you're seeing? And then second, you want to make sure that it's matching the free stock market. I'm not sure I'm not understanding even what you're saying there. Maybe you'll dive on that. And then make sure if you're picking a symbol, it has to be outperforming that. So would you clarify further? What do you say when you say the free stock market? What do you
Okay.
mean? What you mean on
So first of all,
index or?
it's my own term. There's no industry term. The big box advisor world doesn't have this term. But what I just realized is you could go buy the S&P 500 through a tracking symbol, right? There's dozens of tracking symbols that can track the S&P 500. You can click a button on your brokerage site and you reinvest dividends. Okay, so just right there, you're going to beat almost everyone over any 5-year period, right? So let's just start with owning the US stock market and just clicking a button and reinvesting dividends. That alone is going to put you in front of, or it's going to put you in the top 1% of all investors, which I think should be the goal of most people. Now, it's only one symbol. which freaks out a lot of people because they've been taught you need 50 symbols. First of all, the one symbol has 500 companies in it, but there's lots of things that people have to come to terms with to grow their portfolio better. And one is more symbols, worse performance. More trading, worse performance. And this is someone who teaches people how to trade, properly. So, the free stock market rate of return, even when ETFs weren't free, I still was like, look, 495 is free. 4 basis points is free. Now you can get these symbols with 0 basis point and, no commission. So it's the free place. And this breaks people's brains like, but financial advisors, big box advisors, they're some of the tallest buildings. They certainly were the tallest buildings in any town before tech. And so it's like, no, that can't be true, because there's floors of people, like there's these research departments, and they all fail to beat, this one symbol. So start with the one symbol. And then if you want to add, that thing you add has to be outperforming, otherwise you're just bringing in, you're dropping another anchor off your boat. You're just slowing down the growth of your money.
That's really clarifying. I really appreciate you sharing that. And so, that one symbol could be like the S&P 500, right? The top 500 companies of the in the US. And if I'm hearing you correctly, you said that will beat over any 5-year period of time. If you click the button, reinvest the dividends, right? You're going to be in the top 1%. Is that a fair summary?
Yeah. Just let's be clear. Different decades, different numbers. Are you in the top 1, the top 2, the top half of a percent, the top 2.5? But we get the point that you're going to be in front of almost everyone by this simple free thing.
Mm-hmm. Yeah,
which
got
is
it.
Really hard to digest.
Yeah, it is, right? Because we maybe get in our own way, right? Either we want to be the hero
but we're not taught that.
Right.
There's no business model behind free symbol, click a button, let's talk in a decade. There's no business model behind that. How's Merrill Lynch going to make their money on a symbol that's free?
Right. Yeah.
Right. And Merrill Lynch, B of A, it's the same company now, but it doesn't matter. Put in big box advisor. And by the way, I'm an advisor. I have all my licenses. So I'm like on the inside kind of being like, guys, it's all BS. Uh-huh. It's all BS. If you want to figure it out and take back control, there's a way. Mm-hmm. But you have to be open to the idea of it being simple.
Excellent. Maybe you can give us a story, because sometimes, even I'm hearing this for the first time from you, right? I'm getting to know you for like 20 seconds ago when we first started the podcast, right? So what's the story to help solidify that? Because I imagine a lot of people are being like, RC, that just seems too good to be true. And you say, well, here's the math, right? Or here's the data, right? So where can we grasp that? What's the best place to go to really I guess quantify what you just said?
Well, there's 2 places. One is your own performance, right? So if you have a 401k or if you have an account at a big box advisor, they have your annual performance numbers, right? So I'll just take a real example. Client came into my life. He had been with a big box advisor for a decade. I said, well, go get your numbers. And it's easy enough to get your numbers. He happened to be at Fidelity, so he pulled 10 years of performance. And I said, just go get 10 years of performance from the S&P, and let's just look, right? Because he had 50 symbols being rebalanced every year. They were all equity, so it was 100% equity, 100% equity. One by a big box advisor, 50 symbols moving in and out, and just one symbol doing nothing, no big deal. So the place you look is you start with your own performance, and then it's easy enough to pull a 5 or 10 or 20-year performance from the S&P. By the way, the S&P is not even the best index. I'm just giving a starting point. And the thing that's important is sometimes people say, what's your performance? What's your performance? I was like, that's not the right question. The right question is, what is your performance first? Like the person asking, like, what's my performance? And then once the person knows their own performance, right, then they can go, okay, Oh, wow, I didn't realize it was 2% a year. I didn't realize it was 4% a year. I thought it was 18%. Oh, that's right. One year I did 18%. And our brain anchors into that 1 year, and we, posture around for 1 year. And so most people don't actually know their performance. By the way, I'm not dissing people. They're just not taught to actually pay attention and connect to the money. We're actually taught to disconnect. And then once they know their own performance, then they can say, oh, I want to do better, right? So, Brett, if you came to me and said you want to run a 7-minute mile, and let's say I was a 7-minute mile coach, and you're like, I want to do seven, I want to do seven. You better well bet I'm going to ask you, let's just go let's run around the track, right? It's 4 times around. Let's just see what you're doing now. Don't worry, and it's 19 minutes. Okay, so you're at 19 minutes now, and you want to be at 7 minutes, and you're in a hurry and you got about 2 months. We've got problems here, right? And so that's what happens to a lot of people. I'm just using the metaphor, like they're coming in running a 15-minute mile, but they believe they're running an 8-minute mile, and they see people on Instagram and YouTube running 6-minute miles who are younger than them, and they go, I want that. And I meet them, I'm like, that will kill you. Or if you want that, then you're going to have to, I'm sticking with the metaphor, lose 100 pounds, stop drinking a 6-pack at night, get to bed at 9, give it 8 hours. Those are all free, by the way. You have to want the change. So how's that for an answer?
That's a great answer. I'll let you go because there's so much wisdom there. Wow, I'm just taking it all in, taking notes here. So first start with what's your performance, right? And it's really putting the responsibility in the activating the person to be responsible for their own what's already happened and what's about to happen, right? Versus, like you said, being passive or disconnected, or it's too complicated, or I need all of this stuff out there, this magic advice somewhere, right? And then it's saying, okay, well, where do you actually want to be? And let's be realistic with those expectations, right? If you're going to run a 7-minute mile.
And by the way, it's fine to do that, but
yeah,
we've got to stretch and this and that. I mean,
hydrate and diet and get rest and work your way up there. Work your way up. And it might take us a while to get going there.
Yeah.
Awesome. I love it, RC. All right. So we established kind of the first secret, right? To simple ways to pick the strongest stocks. And then, maybe 2 secrets there. Is there anything else that kind of comes to mind about practicing these disciplines? What would be the next step, RC?
People have to put money in the market to truly have an experiential learning. One of my big things is you can't paper trade, just like you can't paper workout or paper sex or paper divorce or paper marry. You actually have to put money in the market, and you have to understand who you're going to turn into. There's a Jekyll and Hyde. There's the person who does not have money in the market, who is the most amazing investor on the planet. And then as soon as that money goes into the market, they turn into, potentially a crazy person. And it's because there's no structure, there's no guardrails. They haven't been taught what to worry about and what not to worry about, because they're in their brain. So in you asking me the question, I train my clients to look at price. And really it's price direction, right? Look at price direction and ask the price, right? The stock market, the price chart of the stock market, the price chart of XYZ, ABC, 1, 2, 3. But ask the price chart, are you scared or am I scared? Because it's 2 different things. And if the stock is not scared, but you are, that's very different from the stock being scared and you being scared. And I know that sounds weird, but a scared stock is falling in price. A stock that's not scared is either consolidating and going sideways or going higher. But no one's taught to look at price charts and ask, in many ways, these kind of weird questions. But if you think about it, your portfolio goes higher when you own things whose price is going higher. So why not ask price if you should stay in, that symbol, if you should stay in the market? Now, it's your money, so you have to understand your own financial planning and how much you need in maybe less volatile. But no one's taught to ask the market, are you guys okay? Is the market okay? Or am I being scared by media channels and Facebook, whatever, and outside influences going into my brain? And a lot of times people are scared, but the money isn't. Or vice versa.
You just said it was so powerful there. So let me see if I can recap that. people have to be willing to put their money in the market to actually see where this thing is going, right? I have a saying, or not have a saying, Mike Tyson has a saying that I like to repeat, that everyone has a plan until they get hit in the face, right? So, like, people be going to this boxing match and they're all excited to beat Mike Tyson, but then they get in the match with him and he gets that one hit and you're like, oh my gosh. So, um, be willing to go in the market and then also check your emotions. Am I scared? Is the stock market or that stock scared? Is that a fair summary?
It is, and most people don't know what like scared is, right? The market being down 2%, that's not scared, right? So we're actually taught to be scared. We're taught to have anxiety around our money. We weren't born this way. We were taught this way by, the industry. It's super dangerous out there. It's super complicated. It's super complex. But hey, Brett, don't worry. I'm going to swoop in and take care of it for you. And a lot of it is really BS. So, you know, even just me saying, is the market scared? Like, you have to, what's the exact measurement of market scared, right? These are not difficult things, but knowing that the market correcting 10% is normal and healthy, and corrections over 20 start to get dangerous, just as an example of when the market is and isn't scared.
Love it. What's the most rewarding part of what you do, RC?
Uh, two things hit my brain at the same time. Um, I have been working from home for 18 years. My oldest is 13 and my other one is 10. So I have two kids. I'm a single dad. And I think for the first 9 years of the first kid's life, he didn't think I had a job. And this is when I was married. He'd be like, well, you don't have a job, Dad. I'm like, oh, what, like, oh, interesting here. Well, mom gets dressed up and leaves, and you just kind of hang out. So the first answer is I get to see my kids grow up.
Yeah.
But I love seeing the shift in someone's brain when they go, oh my God, like I had 40 symbols, 38 were making me poorer. They had great stories or not great stories around them, but just by you showing me how to visually look, no wonder why I had anxiety. No wonder why I was confused. I liked my advisor, but I couldn't understand why I was doing, this poorly. And all of a sudden I show them this simple filter, like, oh, I could just sell 38, replace them with the index, forget about anything else. And I've just accelerated my life and my wealth and my choices and my freedom and my security and my comfort and my sleep, and by literally eliminating, by just applying this filter. So I love when they see that. And by the way, these are not people who are 27 years old and don't know the difference between a bond and a stock. These are people who have been in 20, 30 years. They've just never been taught by a dyslexic who understands NLP and who gets how the brain can be, overwhelmed very easily.
Very well said. That's amazing. Absolutely love it. Learn more about RC Peck, by the way, at fearlesswealth.com. That's fearlesswealth.com. So, shifting a little bit, let's talk about real estate. A lot of our listeners are real estate folks. So, I'm curious, and they're probably curious too. RC, do you invest in real estate? If so, why or why not?
Well, I'm a homeowner, so I do, and I used to be a homeowner in the dead center of Silicon Valley. So I was really invested in real estate. Before my divorce, we had 7 investment properties, and it was interesting. I get them. I actually used to teach a real estate course to show people how to buy investment properties without any stress or worry, or things could go really sideways and you'd still be okay. So, I mean, the answer is yes and no. Yes, I do, because I live in a leafy neighborhood in the suburbs of Seattle where the biggest tech companies on the planet all have their employees living. So by proxy, I mean, I love real estate, by the way. I love Zillow. I love going to open houses. I've always done this my whole life. My mom was a real estate agent. But once when I knew I was getting divorced, I realized, like, you know what? I'm going to simplify my life completely. And I'm not scared by owning ticker symbols. And I had managed the investment properties for 15 years. I saw the benefit, I saw the tax benefits. I just said, you know what? And I want to live healthy to 100, and I'll be 50 soon. So I said, you know, for the second half of my life, I'm going to consciously eliminate every known stressful phone call from my life. And yet I still love real estate. I have clients who love real estate. I make sure they buy them in the smartest way. They leverage all this, the tax code of the Congress. So yeah, it's a, how about that? It's a yes and a no.
It's a great answer. No, I love it. And I'm curious, we focus on capital gains tax, especially for highly appreciated real estate sales too. So when you sold those 7, what was the biggest frustration when it came to capital gains tax deferral?
I mean, I have to say, I loved the depreciation. Like, I love that the depreciation happened. I did not want to move that into another piece of real estate. For me, I was fine. There was a lot of stuff with finance going on when you get a divorce, as you can imagine. Your balance sheet changes. There was just such a complication with it. I mean, what it really made me clear, and this may not answer your question, but I was like, wow, Congress wants you to own real estate. Congress wants you to buy investment properties because Congress makes the tax code. So it's like, oh my gosh, they really want you to own a property, even if it's just your own, but they really want you to be an investment property owner. Because man, if you do it the right way, it's pretty phenomenal.
Yeah. Okay. No, I'm with you. And by the way, if there was a way to defer tax and move it into the stock market, would that be would that have been of value to you with the capital gains tax, or did you not have a lot?
I mean, look, any time it absolutely would have been a benefit. A lot of it was, and every situation is their own. A lot of it was, I am greatly simplifying my life, and I'm going to really greatly simplify this. But absolutely, if there was a very obvious way, it's like, hey, you have these gains, you can easily move them into the market in a liquid way. That would have been something nice for me to know. So at least it would have been an option.
Yeah, and for those who are listening, shameless plug here, Deferred Sales Trust is that solution. You can now sell highly appreciated cryptocurrency, business, real estate, and defer the capital gains tax. And then you can move into stocks, bonds, mutual funds, ETFs, insurance products, diversify, get liquidity, get diversification. Part of the crash RC happened in 2008, right? We saw a lot of people had overpaid via the 1031 exchange, and they had taken on too much debt because of the equal or greater value rules. And they had rushed into a property, 45-day identification, 180-day close. And they knew they were overpaying, but they felt trapped by this capital gains tax of 30 to 50%. And they weren't sure what to do. Then the music stopped, and now they're fighting with banks, and some lost half, some lost all. And you go, oh my gosh, like why? And why was because of that 1031 exchange that they really felt they had to do and they had to buy. And so that's where my story starts. Everything crashes, picking up the pieces, trying to figure it out, trying to grow my business, learn about the Deferred Sales Trust. The rest is history. We help a lot of people now. But I'm curious, during that time period, right, for you, what was the biggest aha moment, and how does that connect to what you're seeing today?
I mean, this may make me really unpopular with your crowd, but I just remember way before that, say 05, 06, I was like, oh my God, Rich Dad, Poor Dad is going to create more bankruptcies in this country than ever before, or more foreclosures. I was just bumping into people who were literally owning dozens of properties sight unseen. I was like, this is crazy. Like, I just remember that, and phenomenal business person, built a lot of empires. I mean, it didn't affect me. I mean, it affected me because I'm a financial advisor, financial planner, so it scared people. But most of my clients' money was out of the stock market anyway, so it didn't affect them. But the length of time, the wake behind a foreclosure or a bankruptcy, and how it can take you out emotionally for a decade, like how it can follow you, like it's kind of devastating. I mean, devastation means I guess you don't come back. You can devastate a significant portion of your life, And so I remember that happening, like these implosions happening. Um, and I remember looking at the 1031, I'm like, there are like 180, 45, got to do this. It's like right here in this corner. And then if you do that and you got to sneeze in the third minute, and then it's just like, is this how bills are made? And the answer is, yeah, it is. It's just really, so I think just was how missteps can have very lasting impact on a person, especially financially.
Couldn't agree with you more. And no, it doesn't. I think our audience appreciates that. And I like how you put that the length of time for these decisions, if you're overpaying and overstretching with debt, right? And especially sight unseen, not seeing properties, just to get up in a craze of buying real estate. Now I'm going to win, right? No, it's the business plan, right? It's the value add. It's making sure you have a balanced, budget and you're not overextending, right? And so, yeah, you're absolutely right. The emotional toll that took, for people who did get foreclosed on, and especially if they built like 10, 20, years worth of wealth, right? This is blood, sweat, and tears just to see it, get knocked out. And this is, again, why we love the deferred sales trust. You can sell, pay off your tax or pay off your debt, defer the tax, and then diversify and get liquid and sit on the sidelines. Like we just had a client in Alabama that sold a $2.6 million business, deferred all the tax, paid off his debt on the business, $600,000 tax deferral. And now he's building, and he's not going into debt to build because he has this amount of funds. We call it the go fund yourself, right? So he can do it in a more less stressful way. So that being said, are you ready for the lightning round?
Let's go for it.
All right. Knowing what you
Bring
know
it
now,
out.
knowing what you know, RC, if you go back to your 25-year-old self, what's the one golden nugget you'd make sure to tell yourself to do?
Oh my gosh, the one nugget I tell him to do. I mean, here's the thing. I have the answer for you, but the problem is he wouldn't have listened. I mean, so look, the answer is be kind to yourself. You have a lot of time in front of you, but he's not going to listen to that. He's going to tell you to F off and be like, whatever, dude, I'm doing it now. I'm king of the world. So that, I mean, that's the problem with the 25-year-old brain. I know this is lightning round, but the answer is there's a level of kindness that I think we don't learn until hopefully we learn in our 40s. Some people never do, but it's just this self-kindness that is so important. Mess ups are going to happen. Most people have them because we only posture about the good things. We only think successful people just, everything works. And it's never that way.
Love it. Great answer. Love it. Second question. What's the number one book you've recommended or gifted the most in the past year?
Probably Tribe. I'm part of a men's group. I think men over 40 are kind of lost and on their own. They're, in a marriage. I love marriages. Mine didn't work out, but they have a job, they're in a marriage, they have kids, their friends have moved hundreds of miles away, and they're kind of these sad clowns, but they have to pretend that they're happy on the outside, but on the inside, they're just kind of dying. So the book Tribe, and I just see dads in their 40s as my tribe. And I'm always reaching out to dads I don't know. And my kids are like, do you know him? Like, no, I just call every dad. I'm like, what's up, dad? Like at Home Depot. And I want to help them. So I love the book Tribe.
Excellent. Love it. Next question. What are you most curious about right now?
What am I most curious about? When Ethereum's market cap is going to overtake Bitcoin's market cap.
Wow. Which leads to the next question. Are you investing in cryptocurrency?
I'm most interested in the part of the market that has the most momentum. And here we are in 2021, and the part of the market, I mean, all parts of the market, stock, bond, cash, real estate, commodities, cryptos, it's part in there. Cryptos, if it's either a technology or it's a utility or it's a currency. But that has more momentum than almost anything else. And so I'm super interested in making sure my money is in the parts of the market that have the momentum, so I can just get into the raging river and just be taken along with it without having to be smarter than anyone else.
I love that. I'm gonna do a shameless plug too, because you brought up the crypto. We're helping a couple right now. They bought Ethereum, 100 grand like 5-6 years ago. Shot up to 6 million. They didn't sell it because they didn't have a capital gains tax thing, and then it slammed down. Now it's back up to like 9, 12, and maybe even 15 today with what's happened in this last week. And we're going to help them sell, defer the tax, and then put it into diversified investment grade securities, annuities, insurance, cash flow producing real estate, so they can like retire and spend time with their
Yeah,
family and do
I
whatever
love
they
it.
want, right? I mean, it's really life changing what we do. So I'll shamelessly plug that. And this is the last question. After all your success, RC Peck, how do you stay centered in your values and stay encouraged to charge for new goals?
Oh, I measure my success by how much I think my kids know I love them. I don't mean to go Dr. Phil on you. Um, I, I probably measure it by just my kids. And I know you can't measure happiness, but you can certainly measure temperament and behavior. I measure it by who's in control of my time, right? Am I in control of it or is someone else in control of it? And believe me, there are people, so many more people richer than me, but I think I probably live a richer life, a more richer life than more people because I just have this extreme, I call it extreme balance. I have this extreme balance and being able to choose how my days look. I mean, look, I love what I do. I've been doing it my entire adult life. My first client I got when I was 27. I'll be 50 soon. I love helping investors just get rid of the garbage and the crap and just bring just extreme clarity into their finances.
Amazing. RC Peck, he can be found at fearlesswealth.com. That's fearlesswealth.com. I want to thank you for being on the show. I want to thank you for sharing a part of your story. I mean, just pages and pages of notes of wisdom here. I want to encourage you to keep using your gift of dyslexia and seeing things differently and not being okay not belonging to the status quo, so you can help more people create and preserve more wealth and get financial freedom and become more fearless in their wealth. And I also want to thank our listeners for listening to the episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the deferred sales trust and getting with someone like RC Peck to clarify your wealth building with picking stocks and doing things simply is a amazing way to grow your wealth. Hey, if we can help you, please go to capitalgainstaxsolutions.com. And please help someone who's selling some Ethereum or a business or real estate. Do them a favor and just share this episode with them so perhaps they can save hundreds of thousands to millions of dollars of capital gains tax using the deferred